In this video, I'm going to give you an update on what's going on in China's credit markets, especially with the recent developments of Fantasia, another real estate company going into default on their debts in China. So just to recap, a few weeks ago, it came out in the news that Evergrande, which was China's second largest real estate developer, defaulted on its debts. It started missing its bond repayments, okay? And so, it was estimated that China's Evergrande Group had more than $300 billion of US dollars of debt. And they only kept about $100 billion on the books. So they kept about $200 billion off the books that were hidden or spun off into other subsidiaries to hide off their reported balance sheets, so to say. And because of this, it becomes very difficult to estimate the risk of how over-leveraged these companies are. In any case, Fantasia is now the second company to start missing its debt payments. Now, the amount of money that it missed was about $206 million in debt. And it doesn't have the amount of debt that Evergrande does. So it's not near to the size that Evergrande is. It's not even one of the top 10 of Chinese real estate developers. But the fact that we're seeing another company start to default on its debt tells us that the Chinese credit markets are feeling the squeeze, especially in the lower grade sectors, from the junk bond squeeze on the interest rates. So ever since about March to April of June 2021, we've seen China's junk bond yields start to skyrocket, and they have nearly doubled in the last 4 months, okay? So from May, June, July, and then to August, they went from 8% to 14%. Now, to recap here, China's junk bond yield skyrocketed to 20% during the crisis of just right after '08. So in 2010, they had a huge spike in junk bond yields as there was a post 2008 possible bubble burst inside of China before the government stepped in with massive stimulus and expansionary monetary policy to try to quell those markets, okay? Now, we may not have heard too much about that credit market's potential breakdown back then, and the reason why is because private bonds, as a percentage of total bonds in China's market at that time, only comprised of about, say, 20% of the entire bond market. So government bonds inside of China severely outweighed private bonds, and more than likely the Chinese government has taken a more active role in investing in state-owned banks and state-owned corporations to back those with government investments financed by their tax revenue system, okay? But ever since then, and this data is only up to 2017, the bond market has essentially doubled in the private sector. It's gone from 20% to over 40% of the bond market, which is much more in line with other major developed countries in terms of government to private bond ratios. Just for a frame of reference, our government to private bond ratios at this time was about 65%. So actually, China has a bigger private bond market as a percentage of its total bond market than we did in 2017. So that means that the potential for defaults inside those private bond markets now has a potential greater impact on the Chinese economy than it did back in 2010 and 2011. Now, since then of what's developed in August, where Chinese junk bond yields reached 14%, it has started to pick up even further. And data that has been compiled from Bloomberg has updated it up to 17%. So when I wrap up here, I'm just going to play this clip from Bloomberg right quick so you can hear it in their own words about how fast this is starting to pick up and then I'll recap on how fast I think things could potentially break down absent of some type of government intervention inside China.
Well, I will say it does really feel like there has been a turning point this week. I mean, the sell-off was savage, really accelerated, of course. Yields at 16.9% is extraordinarily high for this market. And we are reaching this territory where we are seeing a potential danger point that actually, because refinancing costs are now so high, because the implied borrowing costs suggested by those soaring yields are so high, that it becomes almost a self-fulfilling prophecy, where firms struggle to refinance because they are essentially not able to tap the offshore bond market, and they're not able to kind of continue to roll over all of those imminent maturities. So that's something certainly that investors are looking at very, very closely. And of course, we're seeing more questions on just how far yields are going to continue rising during this sell-off.
So with that, you can tell there, you can feel that the concern inside the reporter about what's going on inside of China's credit markets. One thing to take note there is that Evergrande comprised of 1/6 of China's junk bond yields. And ever since then, China's Evergrande's bonds have deteriorated by over 50% of its value. So its interest rates have skyrocketed, and it's one of the reasons why those junk bond interest yields are spiking so fast. Now, that's not entirely a bad thing, because that means a greater weight of that increase in interest is sheerly due to the fact that Evergrande's interest rates are spiking. Nevertheless, it is no doubt making other investors wary of the other junk bond companies that they own, and they may dump those. And if they do, if they start dumping those bonds and sell those bonds onto the markets, it'll press up interest rates very quickly over time. Now, just to take a look at our high yield interest rates right quick, and just I want to give you kind of a frame of reference of how fast we escalated back in '08 here. The change can be very sudden. So when it started to become apparent that we were in a financial crisis at the end of August in '08, our junk bond interest rates doubled. Okay, so they doubled in the matter of 3 months. 3 months. This is what's going on in China right now. Okay, so in the matter of just about the same time, actually a little bit longer, China's junk bond interest rates have doubled. Okay, so this is probably going to pick up steam, and China's economy will most likely enter a recession in 2022 as they feel the gravity of the credit burst that has accumulated from the massive amounts of malinvestments that have developed inside of those markets right quick. So just to recap on here, it's inside of the real estate industries, but if it starts spreading to the $12 trillion of the total bond market, which was in China, then yes, this could spell potential doom. Now, back in 2017, the entire bond market was only $10 billion. It has since increased massively since then. In the private markets, that was less than half of that was inside of the private market system. They're saying that right now, China's local credit markets is 12 trillion, okay? So I don't think that contains the weight of government bonds, because that's not local. More than anything, it is primarily consisting of corporate and financial bonds. And so that means that the corporate financial markets have more than doubled ever since 2017, and probably we saw a lot of debt being picked up because of the pandemic that struck China in 2020 and 2021. So the likelihood that we're going to see a credit bubble burst inside of China remains very high because of these high junk bond yields. And given the history of junk bond yields here, if they spike over 20%, that's likely going to signal a credit bubble burst, just like what we saw inside of our credit markets in late 2008. Guys, that's what I have for this video. I'll keep you guys appraised of this situation. I'm also taking a look at what's going on in our interest rate systems. I'll probably post a video later this week after I've accumulated enough data where I feel comfortable presenting on that. But I think that it's kind of important that if we're seeing junk bond interest rates start to spike in developing countries that are at higher risks than we are, we need to take a look at the risk situation in ours. So, guys, I hope you've liked this video. If you do, just click that like button, leave a comment below. Let me know what you think about all this. Please subscribe to my channel if you haven't already, and click that notification bell just so that you are notified whenever I upload a new video. And I'll talk to you guys next time.